Now let's talk about how many technical indicators you're gonna use. The simple answer to this question is as much as you want. But here's the condition. As long as you are able to know what indicator you want, what information you need in any specific technical indicator. Me personally, I use up to 9 technical indicators, but it's really not blurred. With time, with experience, your brain will learn how to embrace all the information provided by the technical indicators and come up with the message, right? And there are also what I call minor indicators and major indicators. The minor indicators on my trading system are things like fractals. The fractals, I don't use them much, right? I use the fractal for only one reason, for a stop loss point, and that's it. And another minor indicator is my ADX. My ADX is kind of an indicator that shows you the bull and bear strength and also how the market directionality, right? Like if the down moves have bigger range than upper move. You can go and Google ADX and see how it works. And then my major indicators are the moving average. I have two of them. My Bollinger Bands and the MFI or Money Flow Index. The Bollinger Bands, I use them to measure the volatility in the market because in my trading system, I trade volatility cycle, right? Like it means I put my expectation on volatility, right? I don't have like if the volatility allow me to expect 20 pips or 30 pips on a trade, I will just put my take profit there and just wait. If my volatility cycle shows me I have an entry opportunity, but I only have 40 like 4 pips available, I will only book profit at those 4 pips. I don't try to trade breakout. I don't try to trade all those kind of stuff because usually when it catches you on the wrong side of the trend, you are in trouble, right? So what I basically do, I spot an entry opportunity and from the volatility available, I book my profit within that. And tomorrow is another day. New volatility, new everything. Next trade, next setups. And what about the MFI? The MFI, I use it to spot oversold point on uptrend and overbought point in downtrend. Usually in an uptrend, there's the point where the price drops, and what interests me is the oversold point. That's why I get into a trade, right? So I basically use the MFI for entry opportunities. And another indicator I use is the ZUP. The ZUP is Universal Zigzag Pattern by Larry Pesavento. What I like with the ZUP pattern is like it basically shows you the harmonic pattern, right? The harmonic pattern. But funny enough, I do not use it the traditional way. I have my way of using those zigzags, and it helps me to spot a reversal point. It helps me to to filter price activities and price actions. And the last indicator I use is the Ishimoku, but just the cloud, right? I just use the cloud of the Ishimoku Kinko Ayo. The cloud gives me kind of an overview of the price, like because my MAs are the 9 minutes 9 period MAs and 26 period MA, and the cloud has a very bigger time period, like which is very interesting for to spot support and resistance point. And that's basically all I do. So when the price is very far from the cloud or the Kumo, honestly I don't even watch the Kumo, right? So it's kind of also like a minor indicator for me. So it only trigger in my mind, or it only trigger into it only get into consideration when the price is getting close to the Kumo, and that's it. So to keep up, like you can use as much as technical indicator you want. as long as you can know, as long as you can extract the message and the meaning, the information of every single of them. And also there is also the catch. Also, a tip I would give you before taking your technical indicator, right? A lot of technical indicators shows the same give the same informations, like the exact same information. So it's going to be useless to use both of them. Like, I will take an example, like the stochastic indicator and the MFI and the money flow index and the RSI, right? Basically, those indicators, they are there to spot overbuy and oversold point. So having both of them is useless, right? Some people would say, "Oh, you can have both to confirm the signal," but that's just not how it works. You have to be able to read the price first. Like, when I'm talking about the price, I'm talking about the candlestick, the trend, the pattern, right? You have to be able to read them, and then only those can give you relevance on the message of the price actions. So to be, and what else, like for volume, right? You can be using the accumulation distribution and still use like the MFI or don't or any other volume indicator. Any indicator come with a specific meaning or information, level of information you're looking for. So the more indicator that gives the same message, the more redundant information you have. So you are not trying to have confirmation. What you're doing is, like, if you have, it's true that if you are having a trade, right, and both of those indicators give you a trading signal, right? The probability is that it gives you better probability. It's true. But what if it's wrong? What if it's wrong? What if it's wrong? What is going to happen is going to be like, you rely on two indicators that shows the same message, and it will be very hard for you to accept that both indicators being wrong. But by using just one, you easily know that it could be wrong, and then you can just move on.